Good morning. My name is Vladimir Tikhomirov. I'm chief economist at BCS Global Markets, and I'll present you my view in macro area for the coming week. Well, it's just 1 week left until the US presidential elections. This was the event that has been framing global market developments for the past few months. And given the short period left before the elections, it is quite expected that the markets would be taking a more backseat and waiting for the result. That could mean that the appetite for risk is going to come down. We already see signs of that happening in Asian trade today. And that could lead to some pressure both on the stock market in Russia and on the ruble, particularly in the second half of the coming week, once we pass the traditional seasonal tax payment season with exporters selling effects. Currently, this is a factor that supports the ruble, but towards the end of this week, I would not be surprised to see some weakness in the ruble, which would be driven solely by external developments, as I mentioned, the US presidential elections. To add to that, after the election date, the next 2 days would be the Fed meeting, which traditionally is also development that causes more risk aversion from investors. Although I don't expect the Fed to make any significant changes to its current monetary policy, not in the rate, not in the programs of support for the economy, but generally the investors, I think, would be taking a more cautious stand. Looking at other developments, the past week have seen a couple of those. One was the central bank meeting. There were no surprises there. The Central Bank of Russia decided to leave rate unchanged at 4.25, which was very expected by myself and the market. So there was no reaction on the market and the ruble rate to that. The message from the central bank became much more cautious compared to the previous statements, although the central bank retained a signal that they might actually cut the rate again at one of the coming meetings. At the same time, they became much more cautious on the short-term outlook, both on the inflation side, on the growth and geopolitical side. I retain my view that I don't think that this central bank is going to change this rate anytime soon, not at the next meeting in December, and not perhaps even through the first half of next year. And another piece of news on Russia last week was the publication of a monthly report by the Russian statistical agency Rosstat. Again, no surprises there. Overall, the picture started to deteriorate. The macro picture started to deteriorate in September, mostly on the consumer side and predominantly linked to the new wave of COVID-19. And we have seen the wave starting, or the number of cases of COVID cases starting to grow in Russia since mid-September, and that definitely affected the consumer behavior. We have seen a reversal in the trend in retail sales. In services particularly, there was a big reversal downward. And I expect this trend to continue in October, again driven by the COVID situation. To sum up, basically, we'll be watching the political events in the US. That will be the prime factor that is going to drive the markets. 1 week left, so no major developments on the markets I expect. Actually, I expect the markets to trade mostly on the sidelines, increased risk aversion. Thank you.